Hey, what's going on YouTube? My name is Ernesto if you're brand new here. In this video, we're going to be showing you guys different types of stocks and which ones are best for you. So if you're a brand new investor, if you're thinking about investing, or if you already have your hands in it, this video can give you some more clarity on what you want to invest in or what type of investor you want to be to determine your future. So go ahead, stay tuned. All right, guys. So the first thing we're going to be looking at is the portfolio. We're sitting at $5,159 roughly. Market's still live, so it's changing right now. On the day, we are up $75.66 plus 1.5%. On the week, we are up $563.24 plus 12.25%. Looking real nice. On the month, we are up $505.08 plus 10.85%. And the past 3 months, we are up $422.25 plus 8.91%. Looking real good, guys. Looking real good. So the first type of stock we're going to be looking at is a blue chip / growth stock. Sometimes they're hand in hand. And the thing is, a lot of these different stocks can fall into different categories at one point or another or at the same time. But a growth stock is usually a stock that usually doesn't pay dividends. They grow very rapidly, and instead of paying dividends, they want to put that money right back into their company to reinvest it so they can keep growing rapidly. But a blue chip stock is something that's very well known, usually a larger company. It's more stable, more expensive in price per share, very dependable, reliable. They have a great track record, very proven, just tons of good things to say about the company and hardly any negative things. First example I'm giving you guys is Amazon. Right now, price per share is $2,444.31. They have a market cap of $1.22 trillion with no dividend. So let's look at the 5-year chart. 5-year chart growth the whole time. Blue chip company. Everyone knows Amazon. They're not going anywhere. Great stock to invest in if you have fractional shares right now. Next stock we're going to be looking at is Google, Alphabet Class A. Right now, price per share is $1,407.35. They have a market cap of $961.07 billion with no dividend again. Right here, let's look at the 5-year chart. 5-year chart growth in the past 5 years continuously. Other than this pandemic that hit, obviously it's still going on. But another great company to invest in if you have the money or if you have fractional shares again. Everyone knows Google. They're not going anywhere anytime soon. They're just going to keep going up and growing and keep being that blue chip type of company that, people want to invest in and everyone knows about. So the next example right here is going to be Microsoft. They have a market cap of $1.39 trillion. And this one does pay a dividend of 1.11. It's not very high, so it's pretty low, meaning it's probably better to invest in all those other higher ones because this is Microsoft, a more reliable company, very versatile, diverse, stable, reliable, all those things I said earlier. This is the company that you want to invest in. And right now they're looking real good, very bullish on Microsoft, and I want to buy some more shares and continuously buy more shares. So stay tuned for the portfolio review number 2, and I let you guys know what I got. The second type of blue chip growth stock that does pay dividends is Visa. So right now, Visa's sitting at market cap of $405.56 billion. They have a low dividend again of 0.63. And 5-year chart, continuous growth the whole time. Another very well-known company. Visa's founded in 1958. They've been growing for the past 5 years continuously, you can see here. So again, if you have enough money to invest in these 4 different companies, I definitely invest in them. Maybe even just Microsoft or Visa, since they do pay dividends, if you want that type of passive income. Okay, so the next type of stock we're going to be looking at is dividend stocks. And what a dividend is and they pay out partial earnings to the shareholders, which is us as the investors. So it can either be a high dividend, low dividend. Usually the more higher the dividend, usually the more riskier and volatile that it is of a company. So I would definitely do your research, pay attention, and look for the right numbers that you need to look at. So there's many different types from every different sector. Some of the more reliable ones are either Dividend Aristocrats or Dividend Kings. A Dividend Aristocrat is a dividend company that has paid consecutive growing dividends for 25 years, and a Dividend King is 50 years of consecutive dividend growth. So they can be very volatile also due to the market or economic times or pandemic like this is happening right now. So take, for example, ExxonMobil. I don't know if you guys know about ExxonMobil, but they were an oil company and gas, and they were paying dividend growth of 38 years consecutively, putting them in the Dividend Aristocrat category. But everyone was at that stay-at-home order mandated, and no one was driving. Hardly people were working. People weren't going out. They weren't spending money. So everyone was staying home, not wasting any gas, not buying any gas. So ExxonMobil was hit pretty good with this from the pandemic. So even though they had 38 years, they still had to cut their dividend because they weren't bringing any money in and no one was buying any oil or gas, So you have to really pay attention to this stuff. Definitely do your research. But let's give some different examples. Another good example right here would be AT&T. So I talked about AT&T and Verizon in my past video if you guys want to check that out. But here's a quick little summary. AT&T has been growing their dividend for 35 years consecutively. Sure, all of you guys know about AT&T, Verizon, T-Mobile, probably top 3 companies right there in phones. So they're very diverse and another great company to invest in if you guys want to check it out. And let's take a look at Verizon right here. So Verizon has been growing dividends for 13 years consecutively. Another great company to invest in, very diverse, and they haven't really been hit by this pandemic that well or that much, to be honest. They've been pretty consecutive with their price and not dropping too much. Another dividend company is Realty Income, ticker symbol O. They have a dividend growth of 26 years consecutively. They pay their dividends monthly, which is, if you care about monthly or quarterly, then monthly would be nice. They paid 0.233 per share. If you guys want to check them out, that's Realty Income. Great company right now. I own them. Another good one is MO, Altria Group. They have consecutive dividend growth of 50 years, putting them in the Dividend King category that I was talking about earlier. They have an 8.90% dividend yield right now, and they're paying 0.84 cents per share quarterly. So another great company to invest in. They're in these categories for a reason. They've been consecutive through multiple other economic hardships and stock market hardships. So, great companies to invest in. I own all these right here, and I definitely want you guys to look at them also and do your research for sure. So that's going to be it for today, guys. That's part 1 of the video. There's going to be a couple more parts to this little mini series that I'm doing right now to show you guys the different types of stocks and their meanings and give you a couple examples. And so you can decide which investor you want to be. If you want to be a long-term grower or if you want to be a dividend investor investing in that passive income where your money's working for you and you can either take it out for yourself, pay your bills, or you can take it out and put it right back into those companies and those stocks so you can keep compounding that and growing your money like that. Stay tuned for the next video, guys. Thank you for listening. Again, not a financial advisor. If I said anything wrong, gave out the wrong information, go ahead, let me know in the comments below. Let me know which stocks you guys own and which type of investor you are. And I'll see you next time. Thanks.